Welcome to the Runway, where we cover current events in crypto, Web3, and tech. It's Monday, March 4th. Let's take off. Bitcoin tops 67K, nearing silver's $1.38 trillion market cap. Ether also hit a new milestone, recording its highest price since January 2022. It's looking highly likely today that we are going to see new all-time highs, probably for Bitcoin, either today or sometime this week. The momentum is just out of control. A big part of that likely being these ETFs that are just sort of sucking up the supply of Bitcoin because they actually have to custody the Bitcoin to have it in the ETF, right? So as the market allocates sort of this passive buying capital, they are going to Coinbase, they are going to different exchanges and buying at whatever price they can Bitcoin to put into these ETFs for customers. This momentum stopping anytime soon, things might get even more precarious if once the halving occurs in about 51, 52 days, when we see that halving, we're going to have even less Bitcoin supply available being produced daily by miners. So this is just very simple economics. It's basically just a supply and demand equation. The market is going to truly see what demand looks like and what supply looks like when you have a truly scarce digital asset. Let's go to our next story. Tether's USDT stablecoin touches 100 billion market cap, benefiting from crypto trading frenzy. Despite years-long scrutiny over Tether's stability, USDT saw a rapid resurgence in 2023, benefiting from its close competitors' troubles. This is a interesting metric to look at. As market cycles sort of start, you sort of see these different stablecoins, USDC and USDT. You're going to see more of those cryptocurrencies, of those stablecoin cryptocurrencies. They are reserve backed with the money, the physical, or actually the dollars that are in the bank account. And that's backed on chain, right? So these are actually dollar-backed stablecoins that are issued by Circle and by Tether. And you're going to see the supply of those grow, right? That's going to grow and grow because there's more demand. People want to mint new stablecoins to be able to use it like in the Web3 ecosystem, whether that's DeFi stuff happening on Ethereum or Solana, or to participate in different lending protocols or any of these other chains, or people wanting to use Uniswap and different decentralized exchanges to purchase other crypto assets with that Tether. New ruling in SEC's Coinbase insider trading lawsuit comes as a blow to the crypto industry as judge finds secondary token sales were securities. I was reading this over today, and I really don't think this is that big of a deal, right? I think this will likely get overturned or these lawsuits make their way up to the Supreme Court and different court systems. It is interesting to see the sort of lawfare that's going on, right? We kind of talked about this last week where an exchange was preemptively bringing a lawsuit against the SEC in a favorable jurisdiction in Texas, where now you're seeing the same thing happen here. And guess where this ruling was made? No place other than the swamp itself, Washington, D.C. I'm really skeptical of the impartiality of the court system there in Washington, D.C. And that's just a fact of the matter. And there's a reason that the SEC is bringing these cases in Washington, D.C. and in these little places that they've sort of cherry-picked. Eventually, this question will probably make its way to the Supreme Court, and I see the Supreme Court being much, much further on the law of the land with the Constitution and sort of check the power of the executive branch and the overreach that's occurring here. There's an interesting article, kind of talks about the logic, and it talks about the different cases that have occurred, even in some of these hand-picked areas that the SEC chose, New York as an example. You've got the case with Judge Annalisa Torres in the Southern District of New York, when she basically said that the secondary trading of cryptocurrencies, there was no explicit contract there. So they are not securities, right? So now you've got judges in other cherry-picked areas. Oh, these are securities, or Terraform Labs or whoever. It was kind of like a no contest thing. Nobody showed up to even contest this case. On Friday, a federal judge in the Western District Court of Washington issued a ruling in the case against Samani. The ruling, which agreed in part to the SEC's request for a default judgment, could have serious implications for both Romani and the crowd crypto industry. In the decision, Judge Tana Lin ruled that the case fell under the SEC's jurisdiction because the crypto assets at issue were securities, even though they were traded on Coinbase, a secondary market. I'm very confident that when Coinbase is done with their lawsuits, and Kraken is done, and the SEC's handed more losses, and these cases get appealed and sort of make their way up, I think the SEC is on the losing end of this one, and essentially just wasting taxpayer dollars instead of trying to figure out how to work collaboratively with the industry and sort of help guidelines that actually make sense. And Congress needs to act as well on this front. Hopefully we will see that with the next administration that comes in, and hopefully it's not the same administration that we have now. Let's move on. AI plus crypto, trouble. Tokens like WorldCoin and Fetch AI have been surging on the back of investor interest in all things AI, but are these projects good bets to gain exposure to AI's potential? Recently, crypto AI tokens rose the coattails of AI chip makers NVIDIA blockbuster earnings report. As NVIDIA's stock sailed north, so did tokens like WorldCoin's, Singularity Net's AGIX, and Fetch AI's FET, according to a February 22 CoinDesk article. AI and crypto is definitely going to be a thing this cycle. I think there's going to be a lot of capital allocated to these new different projects and blockchains. I'd be very cautious with what you get involved with, as you know, there is real potential here, and really do your due diligence if you choose to get involved with any of these projects. There are some that I am excited about, but by and large, a lot of every time we have a sort of new market cycle, whatever the sort of buzzword is gets sort of attached to blockchain, and it becomes sort of a market dynamic or theme. But over the years, I've grown more and more skeptical of these things, and I think that the default position should be skepticism. And if you are interested in getting involved, do some research, understand the project. Yes, there is huge potential for game theoretical alignments of incentives with these different things, taking real world processing power and the compute of GPUs and figuring out how to sort of pair that to the blockchain in a way where you sort of have this proof of useful work concept. I'm a big believer in that, big fan of that. But just because a token slaps AI into its name or says we're involved with AI, I would be cautious. Next up. Here's an article I found that I thought was just ridiculous from Markets Insider. Investors are pushing AI stocks to eye-popping heights because they think the industry will stay unregulated, Harvard economist says. The current stock market rally is partly fueled by the expectation that AI will remain unregulated, despite the potential displacement of tens of millions of workers, the threat of political instability, and the distortion of public discourse, the Harvard economist wrote. I think this is just absurd. These guys are so disconnected from reality. Some of these Ivy League institutions. I don't think the reason that there's interest and there's excitement here is because people think there's not going to be regulation. The question is, are we going to overregulate something when we have no idea what the problems are? Let capital flow, let innovation happen, and then when problems arise, then we can say, hey, look, these are potential problems. Let's make something that makes sense here. But this whole concept and idea, this Ken Rogoff is just out of his mind here. There's real innovation happening here with the advancement of GPTs, which are generally pre-trained transformers, but the reason that the market is going higher here is not because people think it's going to be unregulated. People see the actual potential here. So it's just like a disconnect with reality for many of these things. Let's move on to our next story. NVIDIA's AI chip boom could help the Biden administration bring semiconductor jobs to the U.S. So I do agree with this sentiment. It absolutely could, right? So the same way crypto and Web3 can bring jobs and engineering talent and developer talent, we've got the same opportunity here with AI and with semiconductor stuff that's happening. So let's see if the regulators are going to come in. And I know Biden's already done his executive order to try to regulate something that we don't even know what the implications are yet. The big brother cannot help but just, put its thumb on the scales right away, no matter what, right? You got to be involved, got to be trying to do something. I think the best thing is to just encourage and try to bring innovation instead of doing what they've done to the crypto industry by weaponizing the executive branch, like with Gary Gensler, with the OCC, with the EIA. Speaking of which, we recently saw, we did speak about that last week, where they were actually got a temporary restraining order, and the judge ruled in their favor that what was happening was unconstitutional. I did recently see over the weekend that the EIA is actually polling the data, and they've accepted the results of this, that they are going to now take their time and move much slower with this and do the actual process, and that it is not an emergency. And they're also going to pay the legal costs of the attorneys from, I believe, Riot that filed the suit. So that is a win for the private sector and for the Web3 industry, and a check by the court system and our judicial branch on executive overreach and abuse of power. Let's move on to some spicy Twitter takes. Bitcoin is more valuable than silver. I already knew that a long time ago, but now we know for sure because the market reflects that information. Let's move on to our next story here. El Salvador president says he's still waiting for mainstream journalists to recognize the country's gains on Bitcoin as BTC crosses 67,000. So this is funny because I remember reading all these articles about from how Nayib Bukele was destroying his country, and the mainstream media was putting out their little FUD pieces on the price of Bitcoin going down. Let's give credit where credit's due. Right now, you can kind of see the bias and the prejudice that exists with a lot of the mainstream media personnel that are out there. I don't see any articles saying, hey, Nayib Bukele is brilliant because he took his country's reserves and put them into a hard money, a hard currency, a hard monetary asset that protects from inflation, that protects from debasement, and is at the first truly scarce asset that humanity has ever known. This idea of absolute scarcity, right? Here's one from Ryan Selkis. The last time Bitcoin was this high, the Fed funds rate was 0.08%. Today it's 5.33%. If you sell now, there's no saving you. What he's saying here is that Bitcoin is moving regardless of sort of where the interest rates are, right? You know, we think that loose monetary policy was this thing that was causing Bitcoin to go up. Well, Bitcoin is sort of showing that it's sort of agnostic to that. And a lot more simply, I think it's just a supply and demand equation, right? People have a demand to protect themselves from the system, from the sort of the abuse of the money printer that politicians use, the theft of wealth over time. People want security. They want to save. If they work hard, they want to be able to protect that and save those working hours. And I think we're seeing that play out here in real time. What's going to happen when the Fed inevitably cuts rates and lowers here in the future? More risk on capital is going to flow back into the market and crypto market specifically as well. The Web3 and of what the mainstream considers farther out on the risk curve. This is the reason Bitcoin is 65,000 right now, and as we speak, we're approaching 68,000. So I do think that we're going to see a new all-time high here probably this week, maybe even overnight. Next up, Altcoin Daily. I think he puts out some quality stuff. A big fan of some of his videos and some of his work. He kind of discusses historically the market cycles that sort of occur in the Web3 crypto market, right? Phase 1 is Bitcoin. The flow of money moves into Bitcoin, causing price surges. Here's sort of a phase overlap, which you're starting to see now, where money flows into Ethereum, but it struggles to keep up with Bitcoin. Then Ethereum goes back and forth with Bitcoin and starts outperforming it, which we're starting to sort of get into that second phase here, where now Ethereum is going to outperform Bitcoin, and we hear talks of the flipping. Phase overlap. Money is starting to trickle into large caps where we see buy-ups happening. So we're talking about Solana and other, Chainlink, top-tier sort of crypto projects. Phase 3, the large caps. Ethereum has been outperforming Bitcoin, and large caps are going parabolic. And then the final sort of phase is this alt season, right? Regardless of market cap, some altcoins with strong fundamentals are having pumps. Large caps have gone full vertical, and we're seeing blow off tops. Mid caps, low cap, micro caps all tend to pump around the same time. It seems every coin is going parabolic regardless of fundamentals. Memes are everywhere. Everyone is super excited, and you feel the mania in the air, right? So he's kind of just documenting how it's been historically in these cycles, and I've been through a couple of them now, and I will say that this is exactly what happens. It doesn't mean that this is what's going to happen in the future, right? This cycle could be different, right? As Bitcoin sort of goes parabolic here, and you have that sort of demand that's consistent from ETF demand. The cycle might be different, right? It might go on for longer. It might be less volatile. Who knows? We're gonna have to see. Justin, Coinbase says, some users may experience increased latency and see intermittent balances of $0. Rest assured, your funds are safe. Our team is investigating this issue and will provide an update. Trading is not impacted at this time. And this really just stems from this idea that as the demand is increasing and growing for their to use their platform, to use their application, they have to have the servers and the computers that can support that demand, right? So it's very expensive to run these servers 24/7. So they probably have a process where they sort of ramp up. If the demand is high, they'll rent temporarily more servers to process and to reduce the latency. This is kind of normal and happens in these markets, right? And this takes us back to here where it says they can only control us because we use their currency. But here he says, Liberty NH says, not your keys, not your coins, which is true, right? If you don't want to have to worry about anything, educate yourself and diversify, right? You can do diversification of custody. You can leave some funds on an exchange that you trust that has a 2FA method to protect yourself. You can learn about cold storage. Then you can take some of your funds and use a custodian, right? But not your keys, not your coins. So definitely learn about self-custody to protect yourself and to have true control and sovereignty over your funds. Mastermind, conspiracy theorist here. Coinbase will be the Mt. Gox of this cycle. Market. Yeah, I don't think so. I think this is probably one of the worst takes I've seen. Coinbase is probably the most credible cryptocurrency exchange that we've ever sort of seen. And they are the preferred custodian for, even I think most of the ETFs that are occurring, right? So I think Brian Armstrong's done a really good job. They're a publicly traded company. I think they are the creme de la creme of exchanges globally, in my personal opinion. Mark Andreessen, VNOD is lobbying to ban open source. So here's Vinod Khosla. We have known Sama since the early days of OpenAI and fully support him in the company. These lawsuits are a massive distraction from the goals of getting to AGI and its benefits. This is just bullshit. Elon's raising this point that, he gave a donation to this nonprofit And the company's name is OpenAI, right? Open source is supposed to be open. It was supposed to be a competitor and alternative to what Google and some of these other shady companies were doing behind the scene to sort of open up the hood so people can see. So you can have white hat hackers look at things and you can find and identify problems before they become a big deal. It allows sort of more people to take a look and it keeps it transparent, right? What they've done with OpenAI is they went closed source. They went totally against their name and their entire vision, right? And people put in money as it was a charity to sort of be the opposite of that, right? So it's reasonable that people are pissed, right? I think Elon uses the example when he talks about it as like there's a rainforest charity that you donate to that's supposed to protect the rainforest, and then that charity turns into a for-profit business that is now cutting down trees, right? I mean, like that's kind of the example here, and it really does make sense. And there is merit behind that, right? I'm not saying that what OpenAI did is essentially, not the best decision for all the shareholders or whoever was involved, right? I mean, obviously, for profit is really the way to go in a lot of things, but it just is. They probably should have created a separate company or done something else and started a different venture because this company was supposed to be an open-sourced OpenAI and a charity, right? Not a nonprofit, not a for-profit closed source behemoth that it's become, right? So it's really sort of betrayed the founding division of what it was. And I can see the frustration there. So here he sort of, Mark Andreessen is laying out some arguments and some sort of some takes about why, this is wrong and why this is bad. And he sort of says, of course, every part of this is absurd. He's sort of responding to the idea that all this should be closed source. He says AI isn't nukes, it's math. Big companies, small companies, independent developers, and open source communities should be free to pursue AI. I agree. All companies should not be nationalized, de jure, or de facto government-protected cartel. Restricting AI means restricting math, software, and chips, which taken seriously would impose tyranny far beyond anything even imagined by the communists and fascists of the 20th century. Couldn't agree more. AI authoritarians should learn from history and rethink their positions. I think he hits the nail on the head here. Let's move on. Breaking. World Economic Forum reports Bitcoin mining is helping protect endangered animals in Congo's national forest. This is just fascinating. You're starting to see the FUD machine turn around, right? Now that the ETFs are here, now that BlackRock and all of the sort of huge players are in. So now all of a sudden the messages are sort of being changed and pushed out, right? So it's good to see. Let's give credit to the WF here for doing a good article and posting some good content here. That is actually true, right? And we've spoken about these benefits for quite some time on this podcast. I am not a gold bug, but the repricing of Bitcoin might force the hands of central banks. If they want to reprice their debt, they have to reprice gold, since that is the only asset they have been accumulating. If they reprice gold, they suddenly have a lot less debt relative to their assets on their books. If they do nothing and just let Bitcoin soar, they end up with a pet rock that is worth less and less, and it won't help them. I am just thinking about game theory and what the big actors, including nation states and central banks, might do as a result of what is happening. Interesting thoughts. I think that central banks should be buying Bitcoin. They should have it on their balance sheet. And there might, as El Salvador is doing, and there should be other countries that are doing this. And word on the street is that there is one already, whether it's the Saudis or who it is, we don't know. But this is the end game sort of for Bitcoin, is central banks adding this as an underlying reserve asset. And this is my full belief. And that is not priced into the market yet, right? So people don't fully understand sort of what's happening here and how this could play out over the next decade or 2 decades. They will own Bitcoin as this underlying sort of global reserve asset. And I fully believe that with every fiber of my being. And this has not been priced into the market yet. And this will sort of even blow the lid off of what people have seen so far with these ETFs. Now, maybe this isn't the theme for this cycle. Maybe this is 4-8 years down the line. But I think it will sort of gradually but suddenly happen. Let's see here. We lost this. James McCavity, your client is a legend. You should pay him to tell you what to do next time. This is a post from Peter Schiff in 2017. It's just nice to go back and give him a little troll. He said, just had a client liquidate his entire IRA to put 100% of his proceeds into Bitcoin. What are the odds this turns out to be a wise move? So here we are, 5, 6, 7 years later, and he is up 1,200%, handily outperforming the S&P 500 over the past 100 years or something ridiculous, past 50 years within 5 years, right? So he's up 1,200, 1,300, 1,500%. He's just a casual 10 to 15x return on his Roth IRA or his IRA. So good for him. Cold hard sats. Bitcoiners, take note. Someday soon it will be a good idea to ditch the swag and stop talking about Bitcoin so much. OPSEC considerations. Interesting take, but a lot of people buy, right? If you're wise and if you self-custody your Bitcoin, even if you put it in a hardware wallet, right? It's like, no, you can't access that. And also if you split your custody across different means, different mechanisms, right? Different ways to sort of secure it, as you do with most things, right? You don't just walk around with all of your money in your pocket, right? You don't just the same way you don't have all your Bitcoin on just on a phone app, so you can just send it out. We might have a little bit, but not all of it, right? The same way you don't put all of your fiat wealth just in your pocket. You have it stored in different locations, whether it be in different assets, whether it be in bank accounts. And in the future, there will be Bitcoin bank accounts, right? You will store your Bitcoin, some of your Bitcoin with you'll have some stored personally. You'll have some with different custodians that might take 2 or 3 different people to access, right? A custodian, and there's multiple signing, and there's all this sort of estate stuff being built around Bitcoin. But there will also be Bitcoin banks that will, essentially hold your Bitcoin, and it could be reserve banking still, or it could just be one-to-one lending that could occur, right? You're going to want to get some yield on that. So I think that it's always good to be concerned about OPSEC, but let's not have it ruin our whole lives and go nuts over it. That's all I got for you guys today. Stay safe, stay blessed, never stop learning, and keep an open mind. Thanks for listening.